Money makes the world go round. It greases the wheels of industry, fuels innovation, and connects people across continents. At the heart of this global financial system lie banks, the custodians of our capital and the facilitators of commerce. From Wall Street to Shanghai, these institutions play a pivotal role in shaping the economic landscape. They channel savings into investments, provide credit to businesses and individuals, and manage the flow of money across borders. Now just imagine a world without banks. The global economy as we know it would cease to exist. In the world of finance, certain names resonate with an aura of power and prestige. These are the titans of the industry, institutions with global reach, vast assets, and a profound impact on the global economy. Among these giants, a select few stand out as the top 10 banks in the world, ranked by assets, influence, and sheer financial firepower. At the top of the pyramid sits the Industrial and Commercial Bank of China, or ICBC, a behemoth with over $5.5 trillion in assets. Following closely behind is China Construction Bank, another state-owned lender with a sprawling network across the Middle Kingdom. These two Chinese giants, along with Agricultural Bank of China and Bank of China, underscore the shifting balance of financial power from west to east. Beyond China, the landscape is dominated by familiar names from the United States, Europe, and Japan. JP Morgan Chase, America's largest bank, boasts a global presence and a reputation for financial innovation. The financial world is undergoing a seismic shift driven by the relentless march of technology. Just as the internet revolutionized communication, digital technology is transforming the way we bank, invest, and manage our money. This digital revolution, characterized by the rise of mobile banking, online payments, and artificial intelligence, is reshaping the financial landscape. At the heart of this transformation lies the smartphone, a ubiquitous device that has become our constant companion. With a few taps on the screen, we can check our account balances, transfer funds, pay bills, and even invest in the stock market. No longer do we need to physically visit a bank branch or interact with a teller. Banking has become an on-demand service, available at our fingertips 24/7. Mobile banking, once a novelty, has become the norm. Today, millions of people around the world use their smartphones to manage their finances, from checking their account balances to paying bills to transferring money to friends and family. The rise of mobile banking has been facilitated by the proliferation of banking apps, designed to make managing your finances as easy as ordering a ride-hailing service or streaming a movie. These apps, often sleek and intuitive, offer a wide range of features, from basic account management to sophisticated investment tools. Some even incorporate artificial intelligence to provide personalized financial advice and help users track their spending habits. But the convenience of mobile banking extends beyond simply managing your finances. Mobile payment systems, such as Apple Pay, Google Pay, and Samsung Pay, allow users to make purchases with their smartphones, replacing the need for physical credit cards or cash. These contactless payment methods are gaining traction worldwide, particularly in urban areas where convenience and speed are paramount. Artificial intelligence, or AI, once the stuff of science fiction, is rapidly becoming an integral part of the financial landscape. Banks are increasingly turning to AI-powered systems to automate tasks, improve efficiency, and enhance the customer experience. From chatbots that answer customer queries to algorithms that detect fraudulent transactions, AI is transforming the way banks operate. AI-powered chatbots available 24/7 can answer customer queries, provide account information, and even help users reset forgotten passwords. These chatbots, constantly learning and improving, can handle a large volume of requests simultaneously, freeing up human customer service representatives to deal with more complex issues. Beyond customer service, AI is also being used to enhance security, detect fraud, and manage risk. AI algorithms, trained on vast datasets of financial transactions, can identify patterns indicative of fraudulent activity, flagging suspicious transactions for review by human analysts. The digital revolution is not just changing how we bank, it's also changing what we think of as a bank. The traditional image of a bank, with its imposing marble columns and vault doors, is giving way to a more virtual and decentralized reality. Fintech startups, armed with innovative ideas and disruptive technologies, are challenging the dominance of traditional banks, offering consumers alternative ways to save, invest, and manage their money. One of the most significant developments in this space is the rise of peer-to-peer, or P2P, lending platforms. These platforms, bypassing traditional banks, connect borrowers directly with lenders, facilitating loans and investments outside the confines of the traditional financial system. P2P lending, often faster and more transparent than traditional bank loans, has gained traction among borrowers and investors seeking alternative financing options. Another area where fintech is disrupting the status quo is in international money transfers. The lines between traditional banking and other financial services are blurring, driven by both technological advancements and changing consumer expectations. Banks are no longer content to be just banks. They're striving to become one-stop shops for all things finance, offering a comprehensive suite of products and services under one roof. This trend is evident in the rise of super apps, particularly popular in Asia. These apps, often developed by tech giants like Tencent and Alibaba, combine a wide range of services, from messaging and social media to e-commerce and financial services. Users can seamlessly navigate between chatting with friends, shopping online, and managing their investments, all within a single app ecosystem. This convergence of services is being driven by a desire to provide customers with a more holistic and integrated financial experience. The digital revolution is breaking down geographical barriers, creating a more interconnected and globalized financial system. Banking services are no longer confined by national borders. Consumers and businesses can access financial products and services from anywhere in the world, thanks to the power of the internet and mobile technology. This interconnectedness is particularly evident in the rise of international money transfer services, which allow users to send and receive money across borders with ease. These services, often faster and cheaper than traditional bank transfers, are a boon for migrant workers sending remittances back home, businesses paying overseas suppliers, and individuals making cross-border payments. This trend towards a more globalized financial system is being facilitated by the increasing adoption of digital currencies and blockchain technology. The digital revolution in banking, while brimming with potential, is not without its risks and challenges. As banks become more reliant on technology, they also become more vulnerable to cyber attacks, data breaches, and other security threats. The interconnected nature of the global financial system means that a successful attack on one institution can have ripple effects throughout the entire system. Banks are investing heavily in cybersecurity measures to protect themselves and their customers from these threats. But the cat-and-mouse game between banks and cybercriminals is likely to continue, with each side constantly trying to outmaneuver the other. As technology advances, so too do the methods used by cybercriminals, requiring banks to remain vigilant and adapt their security protocols accordingly. Another challenge facing the banking industry is the rise of financial exclusion. The digital revolution is not just changing how we bank, it's also forcing us to rethink the very nature of money itself. Cryptocurrencies, digital tokens that use cryptography for security, are challenging the traditional concept of money as a government-issued currency. While still in their early stages of adoption, cryptocurrencies have the potential to disrupt the financial system in profound ways. Bitcoin, the first and most well-known cryptocurrency, was created in 2009 as a decentralized digital currency, operating independently of central banks and governments. Transactions are recorded on a public ledger called a blockchain, which is maintained by a distributed network of computers. This decentralized nature makes Bitcoin resistant to censorship and control by any single entity. Other cryptocurrencies, such as Ethereum, have emerged, each with its own unique features and applications. The digital revolution is transforming the banking industry at an unprecedented pace. Banks that embrace these changes, adapt to new technologies, and prioritize the needs of their customers will be well positioned to thrive in the years to come. Those that cling to outdated business models and fail to innovate risk being swept away by the digital tsunami. For consumers, the digital revolution in banking offers a plethora of opportunities. From the convenience of mobile banking to the transparency of online platforms, consumers have more choices than ever before when it comes to managing their finances. However, it's important to be aware of the risks associated with digital banking, such as cybersecurity threats and the potential for fraud. The banking industry is at a crossroads.